Now, when most retail traders look at the Forex market, they look at it in terms of Forex pairs, say the euro dollar or the euro yen or the pound dollar. But have you ever thought for a moment which currency is the strongest or the weakest around the world? Well, this is how the banks view the Forex markets, and I've got the perfect indicator that will show you one way that the banks identify the strongest versus the weakest currencies in order to trade. Now, you can download this indicator from the description tab below. However, before you do, let me show you exactly how and why you can use this powerful indicator that could revolutionize the way you trade the Forex market. Think about this for a moment. How great would it be to have the top Forex trader from one of the major banks in the city sitting beside you all day long as you trade the Forex market? Sitting on your shoulder telling you what you should be buying and what you should be selling. Be pretty awesome, yeah? Well, the chances are that's not going to happen, and I for one certainly can't magic that for you. However, what I can do is tell you and show you exactly what the top Forex bank traders are doing that's way different than most in this business, and certainly more than the average Joe is doing from his laptop in his home office. Now, first thing when people come into the Forex market is they look at the Forex pairs, as I said in my short introduction, the euro dollar or the pound Aussie. Where the top bank trader, he's not looking at the pairs, he's looking at the strength and weakness of individual currencies, and he's pitching that against the strength and weakness of other currencies. Now think about it for a moment. Generally speaking, we trade 8 major currencies in the Forex market. If you cross-match these 8 major currencies against each other, there's 28 different possible currency pairs to trade. It makes total logical sense, doesn't it? To be buying the current currencies that are strong and selling the currencies that are weak. If the pound, for example, is strong and the US dollar is strong, why do you want to be trading the pound against the US dollar? They're both strong currencies. Surely it makes total sense to buy one of these stronger currencies and find a weaker currency, could be the Swiss franc or the yen, and sell that against one of the stronger currencies. That's what the big bank traders are doing, and that's why they've got on edge on most retail traders. Now, with this indicator that you're downloading today, it's going to show you how you can identify which currencies are strong and which currencies are weak, exactly the same way that the big bank traders are doing it. Right, come and join me on the screens now, and I'll show you the power behind this indicator and show you why it's going to revolutionize the way you trade the Forex market. Come on. Okay, so here we are on the screens. Now, this is the indicator that is going to help you look at the markets in a way that's very different than chances are you've looked at it before. It's the way that the banks are looking at the market. Now, to the untrained eye, it's going to look like a load of old squiggly lines, but I can assure you, once you understand what you're looking at, these squiggly lines can show you some really powerful information. Now, let's first explain what they mean. Each individual line represents an individual currency in a standalone format, and the color coding is down at the left of the screen here. So, for example, the green line, the USD, that's the United States dollar. The euro is the blue line, the British pound is the GBP, the white line here, this is this one down here, and then you've got the Canadian dollar at the bottom, but that's the purple line, that's this line in here. Now, when you look at these lines in comparison to the other lines, it will tell you if that particular currency is strong or weak in relation to those other currencies. So quite clearly here you can see the British pound. This at the moment is a strong currency. This is being bought. It means it's going up in value. The weakest currency in the basket of 8 currencies down here is this red currency. Going back to the key here, you'll see the red currency is the Swiss franc. That means the strongest currency at the moment is the British pound and the weakest currency is the Swiss franc. So you want to be buying the British pound and you want to be selling the Swiss franc to put the edge on your side. Now, this is on this particular time frame. It's a 15-minute time frame. If you look at this summary chart here, it will tell you if the currency is strong or weak on all the different time frames, from the 5-minute all the way out to the 1 day time period. A blue box would indicate the currency is strong in that time period, and a red box would indicate the currency is weak in that time period. So a currency that's blue across the board will be a strong currency across all time frames. A currency that's red across the board will mean that's weak across all time frames, giving you even more of an edge. So let's have a look now at that price action chart. So we're looking at the British pound, the white line, against the red line, the Swiss franc. If you pull up the price action chart, here is the British pound against the Swiss franc. You can see there's big buying momentum going on in this currency at the moment. If you want to get the edge on your side, you potentially want to be buying this currency, buying the pound and selling the Swiss franc against it. It makes total sense to be buying something that's strong and selling something that's weak. Why do you want to be buying a currency that's strong and selling another strong currency against it? It doesn't make sense. Why would you want to be selling the Swiss franc and selling another currency that's also weak as well? It doesn't make sense. You want to be buying a currency that's weak, that's strong, and you want to be selling one that's weak. Currencies that are diverging away from each other. Now, the way to use the momentum meter here is by looking for ranging markets. Here you'll see in the middle of the chart, you'll see the orange line. That is the Australian dollar. The brown line is the Japanese yen. These are both hugging each other. They're both stuck in around the center line. They're both not doing very much. So if you pull up a chart in the Aussie yen, you'll see that this currency pair is not trading very much at the moment. It's trading in a very tight range, and a range trader will typically be buying down here and they'll be selling up here. And using the momentum meter here will indicate or show you currency pairs that are currently range trading. So another very powerful way of using the momentum meter. Now, the other thing I want to mention here is the market commentary box. I trade throughout the trading day. I stream several times a day in the forexsignals.com trading room. And I'm trading a strategy called the propulsion strategy. And I'm using this indicator to give me a heads up on what currency pairs I should be trading with my strategy. And I'm populating this market commentary throughout the trading day, looking for setups, telling you what trades I'm getting into and what I'm seeing in the markets. And you can access this all through the forexsignals.com trading room. Okay, so I hope the light bulb's gone off for you here. I hope you're now going to see the market in a completely different light. It really does give you an edge in the market that most retail traders don't even know is out there. This is the way the big banks are looking at the market. I hope you enjoyed the video. Give me a thumbs up if you enjoyed the video. Give me a thumbs down if you didn't enjoy the video. Leave me a comment. I'd love to hear if this makes sense to you. If it's still unclear, let me know and I'll possibly explain it even further. Okay, so it's result time. Now, you'll remember from a couple of weeks back, I offered you the opportunity to enter a competition to win an annual pass to our live trading room here at forexsignals.com. The response has been overwhelming, so thank you all for taking part, and thank you all also for the wonderful comments that you have also left. We're giving away 3 annual passes, and the winners have been randomly selected over the 20,000 or so that have entered the competition. And here are the winners. The names will appear on the screen as well. It's Scott Mariani, Jean Hudden, and Muhammad Aliouv. I don't know where you are in the world. That doesn't give us that information on the YouTube, but please do send us an email if you're one of those winners. We'd love to hear from you. We'll get you set up in the live trading room without delay. It's a really cool place to hang out. Lots of stuff going on in there, live streams throughout the trading day, as well as some education content and a very vibrant chat as well. So I'm sure you're going to enjoy that over the next coming weeks and months. Thanks indeed for taking part. Until the next video, happy trading.